Welcome back to Chart Wizard Trading. Look, I want to present two counts today for Bitcoin. So what you're seeing in front of you right now is the bearish count. I mean, all counts are bullish, to be honest with you, but it just depends what degree you're talking about. But for the medium term here, the next few years, this is the bearish count. Okay, and the presumption here is that you completed. Here, I'll make it bigger so you can see the whole thing for anybody who's not been to Chart Wizard Trading before. I didn't fix these labels to the right time frame here, but that's okay. You get the idea here in a moment that we have up to this point. We have our initial 1, 2, 1, 2. There's a third 1, 2 right here. So 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, and then we're working on the fifth wave. So therefore, the third wave and the fifth wave were extended. That's 2 extensions, which is the max limit. You cannot have 3 extensions. You can only have 2 to finish a wave degree, and then you have to correct. Okay, so if you look at this orange count, which is the highest degree here, 1, 2, 3, 4, 5, right? And then the white count, which is the next, which is the third wave, 1, 2, 3, 4, 5, with a third wave extension within the third, very typical. And we'll come back down to the daily, so you can see this count. This is the last extension. Okay, this is the fifth wave extension. 1, 2, 1, 2, 3, 4, 5. Fifth wave extension. Okay. With no extension within it. Okay, this fifth wave is not extended, which is also very typical. The third wave is extended. The fifth wave is not. The fifth wave is an extension to the highest degree. Okay. So let's zoom down here. All right, so what we're concerned with now, we got this part nailed down, right? We got the 2 and the 4. We got alternation between the 2. The only question then is this fifth wave finish, which there's a solid argument for it to be done, or is it not finished yet? Okay. So this is a completely valid count here to finish the fifth wave. We made a new all-time high already, right? Which is a feather in the cap of the bears. Because usually if you're going to continue and make a fifth wave, generally, it's not a rule, but generally your fifth wave is what makes the new all-time high. I'm not talking about this all-time high. I'm talking about this specific third wave. Your fifth wave is gonna beat this third wave. These are just corrective advances right here. Okay, so to beat 58.3 essentially is generally the job of your fifth wave, right? Which that's what you got right here. That the job of your fifth wave is to beat that high. It's not a rule. Generally, that's how the markets work. Okay. Now, you have alternation, okay? You have a flat here in 2, and you have a zigzag here in 4, okay? And those are the biggest things, okay? You have a first wave extension. This is the important part, okay? This is an extended first wave. There's your second wave. Third wave is not extended. Fourth wave, fifth wave is not extended. So you have a 5-wave move with a first wave extension. It's a huge feather in the cap of the bears. Okay. What I will say is that there's one alternative to the bullish count. But as the title of the video suggests, this is the bull's last chance. Okay. Have to capitalize on this situation. But I'll explain the bear count a little bit further, and then I'll go into the bullish version. Okay, at least medium to short-term bullish. But that's what you all think is bearish and bullish, so that's what I'm going to put out. But regardless, this count assumes a peak, all done, from 2010 until 2024. That is 5 waves complete to this point at 74,000-ish, right? Whatever that is, 74 point or 73.8, whatever it is, right? You have a first wave leading diagonal down, a flat 2, an impulse for the first wave of the third wave, a zigzag 2, and now you've started your very small subdivisions down into the 3 of the 3, okay, which is the big one that you really want to catch. Okay, and if you're interested in learning how to do this yourself, we analyzed this for weeks, days at a time to find this exact entry right in here in the Chart Wizard Trading Discord server. And we caught it. So now we're just riding it. Right, we're going to ride this to greener pastures for a huge trade. Now, I will say the point of the Discord server is not to find Nostradamus. It's not, oh, gut made a call, so there I'm going to follow it, and so on and so forth. No, this is for you to learn how to do this your dang self. Okay? That's what it's for. With the support of the group, to bounce ideas off of each other and to learn to do it the right way. If you're not willing to put in the time and study and work hard to further your own life, then Chart Wizard Trading is not for you. If you're just looking for somebody to scream a call at you, this isn't a trading service, okay? Don't even bother showing up to the website. This is for people who seriously want to take control of their own finances. If that's you and you're willing to put in the work that it takes, go to wavecounts.com. Links in the description. So, regardless, that's what we have here. We have an entry here. If you miss that entry, it might be too late. Sorry. It is what it is. If you want to learn to do it yourself, go to wavecounts.com and join us. Annual subscriptions. I used to give monthly subscriptions, so don't even ask me. I don't give them anymore because people would join, realize that it's too hard for them and they can't handle it and they would rather just stay poor. So they wouldn't give it enough time. But what I found is when people stay past a month, 2 months, 3 months, they might be discouraged at first because it is hard. If it was easy, everybody would do it. That they find that they actually start learning things and they get better. And then they start making profitable trades and they minimize losses. You think if that you're not going to have a losing trade ever, then you are horribly mistaken. You absolutely are going to have losing trades. Going to happen for 100%. But that's not what analysis is all about. I get these comments and stuff on my YouTube channel. You guys don't get it. Okay, you don't get it. It's not about finding Nostradamus and being right every stinking time. That's not reasonable and it doesn't exist. And you won't find a single person who is. Ever. So if that's your hunt, you will be hunting for the rest of your life because you will never find it. When you lose small, and when you win big. And that's what we do at Chart Wizard Trading. So, the idea here is that this is topped, okay, in a super cycle degree, okay? We have to zoom out a bit here to see where the guideline is for a super cycle wave top. The guidelines are going to be the same regardless if this count holds or whether you get a slightly longer impulse in a fifth wave, right? I don't care if it goes to 100,000, 120,000. The guideline is the same. And the retracement guideline to correct this move is near the terminus of the previous wave of fourth degree, which is here. Okay, and that's right, roughly around 3,000. When I say roughly, okay, could it be 2,000? Could it be 1,000? Sure. Okay, near the terminus of the previous fourth wave. That's the guideline. It doesn't mean exactly to the dollar of the previous fourth wave. That's what your analysis on the way down is for. Okay? It means near the terminus of the previous fourth wave, somewhere in that circle. Now, I'm going to make the example of about 3,000. Okay, because that is near the terminus. It's a nice round number, near the terminus of the previous fourth wave degree. If we're topped here, it's 74-ish. That is a 95% drop. And if you think Bitcoin's never done that before, then you haven't been in Bitcoin very long. To put this in perspective, let's say we extended a little bit more to say 120,000-ish. Right? The guideline does not change. This guideline is fixed in time. It will not change. That is where price will go to eventually, whether it's now or whether it's in a little bit more from now. Okay? So even from 120,000, okay, now it's a 97% drop instead. Okay? But this is where price will go eventually. It's what happens every time. This is how the market works. Okay, you can't go up forever. You need a correction, and you need to wash all the weak hands out. Now, how do we get there? Right? Well, this is the primary idea here on how you get there. You spend the next few years. So this has already been topped. And we've been going, working our way down in these series of first and second waves for, about 7 months now? Okay. And eventually it's got to give way. And it will go down quick and hard and fast. Okay. You're going to get, the primary idea is you get 5 waves down in an A wave. Assuming a zigzag, A, B, C, zigzag. Here, we'll turn on the wave structure here. You see what it looks like. Okay, an A, B, C zigzag to correct a wave that started in 2008 or 2009 or whenever the heck Bitcoin started. 2009. Okay, what was it, January 2nd, 2009, something like that. 5 waves down into an A wave. Then you get, a year-long period-ish of B wave, right? I mean, that's going to be a pretty good climb right there. Maybe 200%. Right? So you don't necessarily want to miss that. But then it all comes crashing down, and that's how you meet your guideline. Well, way down here near $3,000. Just a simple 3-wave zigzag that lasts several years, probably to, just a rough guess, around January-ish 2027. Winter 2026 into 27-ish, somewhere in that time frame. And then you find your bottom around 3,000. Okay, that's the current projection. As these waves develop, then you narrow in the projection. Okay, people say, "Oh, Elliotticians are always moving their waves around." Blah 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 blah. Well, what do you think I am, Nostradamus? No. I'm moving the wave labels into probable spots. So as this wave develops, well, my 3 is going to move a little bit, or maybe it's a little bit more down here, right? Or maybe it took a little more time. Right? Of course, I'm going to move my labels. I'm not Nostradamus. I'm not a fortune teller. We take probable trade entries at probable times to maximize gains while managing risk. That's the name of the game. It's not to be right or wrong the first time. You're not going to find that person. If you find somebody who was right, they got lucky. Oh, I called it to the dollar. That means next time I am too. No, it doesn't. It means you got stinking lucky. You don't have to know where it stops to the dollar to be able to trade it. Okay? You just don't. And that's what we learn at Chart Wizard Trading. So let's go to the bullish count now, or what I'm terming the bullish count, okay? That we need a fifth wave. Okay, that what appeared to be a first wave extension and a second wave, third wave and a fourth wave and a fifth wave that are not extended are in fact subdivisions of the third wave, which could be. Okay, so you have subdivisions of the third wave, so then you're expecting a fifth wave. Well, this is the same price structure, okay? If you got 1, 2, 1, 2, well, you also got a zigzag, 5, 3, 5. Okay, and if this is a zigzag, you got 1, 2, 1, 2 working on it the other way. It's all the same structure. And this is where it's the bull's last chance. This absolutely has to hold. Okay? So if you're a bull, and this is the bullish count, okay, I'm going to tell you your guidelines right here. Right here at this pivot, near the terminus of the second wave of the okay, with extended first wave. This is a little extension right here. Oh, that can't happen. This is a mirror image, by the way, of what this is right here, right? Extended first wave, if we go back to the bearish count, extended first wave, 2, 3, 4, 5, for a total of 9 waves, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. Total of 9 waves, right? It's the same exact thing right here. And that's where you're getting this guideline from, okay? The daily might be a little bit too big to look at it, but if I come down a touch here, so right here, extended first wave, right? You got 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. 9 waves. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay? And since the first wave is extended, that makes the guideline the terminus of the second wave. Okay? So if you're a bull, as this comes down to this area, you need to find a bounce there. This needs to hold as a zigzag. It is your last chance, and you need to start impulsing up from there. Because if this breaks, it's done. There are no more bullish counts. It's all over. All over with. This has to hold. Hence the title of the video. This is the bull's last chance. If this market is going to be bullish, you have to find support in here. And this cannot break. This 52.7-ish, right? It cannot break. If that breaks, it's over. So let's review what it could potentially look like, right? Let's say we come down, we find support in here, right? First of all you bull-headed people out there who don't understand markets go up and markets go down. Did I have a trade entry here? You're goddamn skippy, I did. If we find a bounce here, does that mean that I'm not going to make any money? No. Take my profit. Some probably pretty good dang profit. It's going to be, you wait for a little bounce and a pullback. It's going to be about a 10% play right there. Take that any day and be wrong. Oh no, I was wrong and I made 10%. Dang. Come on, guys, get with the program. This is about making money. This isn't about being right and being wrong. Okay, grow up. So regardless, little leading diagonal here for 1, zigzag 2, impulse 1, zigzag 2, And then you got to be off to the races, baby. 3, 4, 5, 3, little correction, 4, 5, all done. Then it's all done. Okay. And the impulse supports that too. You still have your same flat over here for wave 2. And then this would be a zigzag for wave 4. You have alternation. And then you get your 5th wave. Everybody gets their blow off top. And it's all gravy. And I'll trade that too. But this has to hold. Okay. That's the Bitcoins in a nutshell. That's all I'm going to talk about today. Everybody out there who's serious, check out wavecounts.com. If you're not serious, bugger off. Have a great week. Best of luck to you. I'm out.